Hi, everybody. Welcome to Alphabet Soup for Installment Agreements. I hope everybody is having an enjoyable holiday and spending much needed time with family and friends. This is a 1 hour presentation, and I'm going to delve into this topic of installment agreements. A little bit about me. I am Mike DeBliss. For those of you who've seen some of the lectures, I've been presenting on topics specific to two areas, those being litigation and the other being tax law. And I usually get comments such as, wow, that's like two radically different areas, and how did you get into them? So I'll just give you a quick rundown. Basically, my beginnings, if you will, were in the Office of the Public Defender. When I got out of law school, I knew I wanted to be a trial attorney like my dad, who litigated hundreds of cases and was a fierce advocate for the disenfranchised. At the same time, in my last year of law school, I did an externship for a white-collar criminal defense firm in New Jersey that was representing a client who was charged with money laundering. He was the CEO of a large computer distribution company that was selling computers in Colombia in South America, and who had been wrapped up in the black market peso exchange. I came on board right when the right when the firm was preparing motion practice, and I was asked to draft a motion to do two things: to reduce, or to basically to circumscribe, or to bring in a lot of the, not to bring in, I'm sorry, it's been a long last 2 days. It was basically a motion to prevent the government from introducing the testimony that they wanted to introduce through their expert witness. So that was motion number one. And motion number two happened to be a motion related to the tax crimes that the defendant had been charged with. Amongst other things, he was charged with tax crimes. And I knew very little, if anything, about tax evasion. I knew very little, if anything, about failure to file a return. And so I delved into the Internal Revenue Code, and I learned a lot about tax crimes. And with that knowledge, I was able to put together a motion to dismiss. And those two motions were argued amongst the other motions that we had. And that piqued my interest in tax law. I realized that I wanted to come back to that area later on, but I also realized that it was a minefield without a background in tax, because I had no formal background in accounting. And I realized that it was going to require going back to school some years later, and getting my LLM in tax law, which I did. So what I've done today basically is married my two interests of litigation with tax practice. And not only do I specialize in criminal tax defense, but I also really fell into this by accident, but I have a niche practice in the area of international tax compliance, helping U.S. expats to come into compliance with their U.S. tax obligations. I also specialize in civil tax controversies. So these presentations in the tax series are born out of my experience in nearly 10 years doing tax practice. And I do very much hope that you find this information helpful, because you might well find yourself in a position where you know somebody, specifically an accountant or an enrolled agent, who wants to refer a client to you for a consultation on any one of these matters. I covered offers in compromise about a week and a half ago. This topic is on installment agreements, which might be considered the sister program to an offer in compromise. So what is an installment agreement? It's an option for taxpayers who cannot pay their entire tax bills by the due date. It allows taxpayers to pay the amount due over a period of time. So the difference primarily between an offer in compromise and an installment agreement is that in an offer in compromise, the taxpayer is making an offer to pay a lesser sum of money than what is otherwise due in full satisfaction for the amount that the IRS is asserting the taxpayer owes. So for example, if the IRS is asserting a $50,000 deficiency, and we should be very specific in what these terms mean. A deficiency is very simply the difference between the amount that the IRS asserts the taxpayer owes after conducting an examination minus the amount that the taxpayer self-disclosed on that year's returns. So if the IRS is alleging that there was $100,000 of unreported gross income, and the taxpayer has alleged, or the taxpayer has declared $50,000 of gross income on the return, there's a deficit of $50,000 of undeclared gross income that is going to translate into a tax deficiency, an amount that's due and owing above and beyond that which the taxpayer declared on their return. That is the simple definition of what a deficiency is. And what we're saying here is that if the IRS deems that that $50,000 of unreported gross income translates into, say, a $10,000 tax deficiency, and the taxpayer doesn't have $10,000 to pay, but instead has $5,000 to pay in full satisfaction, and has good reasons for why he doesn't have the full $10,000, then through an offer in compromise, the taxpayer may be able to pay the $5,000 in full satisfaction, meaning that the IRS will forgive the difference of $5,000. That is between $10,000, the amount that they believe is due and owing, minus $5,000, the amount that the taxpayer has available to pay. An installment agreement, on the other hand, basically says, hey, you, the taxpayer, owe the government $10,000 on that unreported $50,000 of gross income, and by submitting this installment agreement, we are not letting you off the hook for the complete amount of $50,000, but instead we are going to allow you to set up a payment plan with us. And over the course of these next few years, if you will, you're going to make, in good faith, a monthly installment payment towards the tax deficiency. And so that's the difference, again, between an installment agreement and an offer in compromise. In an offer in compromise, there is the taxpayer making an offer for a lesser amount to satisfy a tax debt. And if the IRS accepts it, then they are forgiving, in essence, a certain percentage of the taxpayer's tax bill. And so the offer is in full satisfaction for the tax bill, whereas in the installment agreement, there is no dispute about the underlying tax deficiency. If it's $10,000, it's $10,000. It's just that the taxpayer is submitting a special installment agreement in the hopes that it will be accepted, so that they will have more time to pay this instead of having to do it in one lump sum. And if the taxpayer doesn't pursue an installment agreement and just simply sits on their hands and does nothing, then the IRS, of course, can begin collection actions, because once an